I think that basically this is kind of a pent-up move from those overall better liquidity conditions. I think the somewhat concerning thing is that you're also seeing a bounce in like meme stocks and unprofitable stocks this year. And so, I wouldn't be surprised to see some of this be given back or some of this, consolidate for a period of time. But essentially, I think that, liquidity, at least locally, reached its worst point last year, and at least is kind of a mild, improvement.
The cryptocurrency market has had many spectacular gains during the past week. A 5-month high for the top cryptocurrency and its highest price since the FTX crash, Bitcoin, the largest cryptocurrency in the world by market capitalization, surpassed $23,000 on Saturday. Ether, Cardano, and Solana, some of the leading crypto assets, are also gradually gaining traction and appear to be moving past the FTX bloodbath. Given that there have been some controversies surrounding cryptocurrency lender Genesis, which has finally sought bankruptcy protection, the most recent gain, which also propelled the global crypto market worth beyond the $1 trillion level, is all the more astounding. According to data from CoinMarketCap, Ethers have increased by 5.79%, while Bitcoin has increased by more than 9% over the past 24 hours. As Lyn Alden describes the intricate and perceptive relationship between Bitcoin and global liquidity, we will now transfer you to her video. Please spend a moment liking this video, subscribing to the channel, and turning on post alerts to ensure that you never miss one of our regular posts. Also, make sure to provide your feedback in the relevant area below. Thank you and enjoy the video for all that you do to support the YouTube algorithm, which allows us to keep bringing you these videos.
So Bitcoin is historically highly correlated with various liquidity indicators, right? So basically how much capital is kind of available liquid for investment. A lot of other investments, they trade off things like earnings, they trade off all sorts of other things, whereas Bitcoin is actually one of the purest liquidity correlations that are out there. And ever since autumn of last year, liquidity improved conditions have actually been in many cases moving up or sideways a little bit. Basically, they declined all throughout 2022. When we got to the end of the year, the dollar index came off of its highs. You started to get China's reopening. You started to get the market pricing in slower forward Fed hiking. Inflation was off of its highs. You had a drawdown in the Treasury General account. It's kind of jargon for some, but basically there's a bunch of things that improved liquidity. And I actually think that, Bitcoin probably would have bounced in Q4 if not for the whole FTX, implosion. Because you started to see a bounce in a number of risk assets. We saw good movements in precious metals, including ones like silver, that are historically more cyclical. And so I think that basically this is kind of a pent-up move from those overall better liquidity conditions. I think that's going to partially depend on how adamant the Fed is in trying to tighten in the face of decelerating data. I think in most market conditions, this would probably be like a top in the dollar, and we'd see more easing conditions from here. Like historically, for example, when you see the 2-year Treasury roll below the Fed funds rate, usually the Fed is done hiking. And so, these in normal market environments, these would probably start to signal a top. Now, because inflation is still historically high, because Jerome Powell has tied his reputation to getting inflation back down,
Right.
they could be a little bit stickier than they have been in prior cycles. So it's possible that we'll retest this. It's possible that we'll experience more turbulence. But I think this is at least the beginning of a rotation in liquidity, even if it's maybe not the final move. I think with the data we have at hand now, that's most likely. We recently saw, for example, industrial production came out pretty weak. We saw retail sales come out pretty weak. There's kind of broad-based deceleration. The New York Fed recession model is flashing recession. And so I think 25 basis points is probably the most likely scenario. Data between now and then could tweak those odds somewhat. Essentially, what we're seeing is that even though they're intending to continue tightening, they're intending to hold their tightness for longer. We are clearly seeing a deceleration of expectations around how much they're going to tighten, in large part because we've seen a deceleration in inflation and a deceleration in economic activity. So I think 25 basis points is most likely.
Do you think jobs are going to be a critical component for their decision making?
I think around the margins, yes, because, for example, if you look at the Fed's mandates, they're not mandated to maximize industrial production, but they are mandated to maximize long-term employment, right? And so they look at basically employment and inflation. as their two primary things to optimize for. By extension, they also have to optimize for financial stability. So, for example, if the treasury market goes illiquid, if the junk bond market, if that goes completely liquid and stops trading, they pretty much have to step in, because that's going to start eventually cascading into failures of financial institutions and employment. But really, at the when it comes down to it, those two initial mandates are what they optimize for. And so the challenge, of course, is that employment is a lagging indicator, right? So usually you don't get substantial increases in unemployment until you're already in a recession. It's basically coincident or lagging compared to other things. Now, we can isolate certain aspects of employment that are a little bit more leading. So, for example, if you look at temporary help, if you imagine running a business and you're facing challenges, you're more likely to let go of temporary help services before you'd let go your permanent employees that have more experience at your company. And generally, so you see a lot more volatility and a lot of kind of a leading indicator from temporary help, both on the upside and the downside, and that's already negative year over year. The total people that are officially employed in that type of work. And so even in the labor market, which is pretty strong, we still see early cracks. Same thing for overtime hours. That's like another leading indicator. It's looking pretty soft. But as long as they're looking at broad-based employment, I do think that they can use that to justify staying tight for a little bit longer than you otherwise would if you're looking at leading indicators. I think the biggest way it affects Bitcoin is how it affects their Grayscale trust, right? If this allows for redemptions, if this allows for a change of ownership, if this gets stuck in a bankruptcy court for a period of time, I think that's the biggest impact there, because GBT is an absolutely massive holder of Bitcoin. More broadly, basically, they own large amounts of venture positions throughout the crypto ecosystem. Obviously, they're a major trading desk. But I think it's healthy to go through these cycles and clear out all these malinvestments, because if you just always go up, of course you're going to get more and more leverage piled up. If you saw an investment that only ever goes up, the rational thing to do would be to leverage, right? If you were sure that it was only going to go up. And so the only way that something can go up structurally is that it has to clear out a lot of that debt every once in a while. And so basically, I think we still have a process to go through. If you look at historical Bitcoin bottoms, they usually, other than the March 2020 event, usually you don't have these V bottoms. Usually you go down, you crash, you capitulate, you go sideways for a while, and you correct both in space and time, and you clear all that out for a while, and then you start to build, right? So I do think that, even though we potentially have seen the lows, I still think there's time to go through before you'd see another just super strong kind of structural rally to new all-time highs.
What are your opinions regarding Lyn Alden's interview and the recent cryptocurrency rallies? Considered as the start of a new cycle or merely a bear market rally? In the section below, please share your thoughts and views. Be sure to set on post alerts for future videos like this, subscribe to the channel, and indicate your appreciation for this one. I appreciate you guys for watching.